News and weather and sports. I'm David Carroll.
And I'm Cindy Sexton. The Nonpartisan Tax Foundation says the new tariffs President Trump announced may cost the average American household $2,100 a year. America's average import tax will surge to 19% this year from 2.5% last year, the highest rate since 1933. Many economists fear the U.S. and global economies will go into a recession if Trump doesn't loosen up on his new trade policy.
Another gut punch of a day on Wall Street as the Dow dropped, look at this, 2,231 points. The S&P 500 is down 10% during the first 2 days of the new Trump tariffs. This follows a 1,679 point plunge yesterday and marks the first time the market has ever lost more than 1,500 points in back-to-back days. The decline comes after China matched Trump's big increase in tariffs, escalating the trade wars, and there is no sign that Trump will back down. Many are now wondering what kind of financial impact the tariffs will have on investors and consumers.
Dallas Payton joins us now with what we all need to know. Dallas.
Cindy, David Well, a financial advisor I spoke with, says this is not as concerning as the Dow Jones and S&P 500 may indicate. The result of the new tariffs is that prices are increasing and there is a decrease in consumption. Chris Hopkins with Apogee Wealth Partners explains what this causes investors to do.
And as a result of that, profits decline, and the stock market looks ahead and it anticipates that these new tariffs are probably going to slow the economy and increase inflation. So what happens is investors get nervous. They start to sell stocks out of their portfolios.
The U.S. stock market has lost about $5 trillion in market value in over 2 days.
So to put that in perspective for the average investor, it's probably somewhere between, let's say, 5 and 10% of a balanced portfolio. If you say 5 trillion, that sounds a lot. But if you look at it in your individual retirement portfolio and your balance, let's say 50-50, your stocks are down, but your bonds are probably up.
Hopkins says unless your objective is short term, such as saving up for a house in the next month or paying to send your child to college next year, you should be fine.
If you're talking about longer term, like your retirement, you're going to have plenty of time to recover from this. Go back and review your portfolio and look and see, are you properly positioned? Do you have a plan in the first place, and are you in balance with that plan? Let's say your target objective was 50% in stocks and 50% in bonds, and now that's out of whack. So maybe it's a good time to go back and rebalance.
From a consumer level, Hopkins says this is going to matter, especially if the tariffs stick and everything we import costs companies 25 to 30%. It'll cost the average family an additional $2,000 to $5,000.
So take a look at your family budget. You see, are you going to Starbucks too many times in a week? Are there some places maybe you can trim back to kind of, help you on a glide path going forward?
Now, if the economy slows, this could also lead to layoffs, so it's good to stay on top of your debt. David?